Well, I'm excited to share with you my Bitcoin long-term TA and entry zones. We have a lot to cover, as you can see here on the screen. So we're going to jump right in and get started. So first up, let's start with the high-level ideas. I'm of the opinion that Bitcoin will get above 100K at some point in the future. So I'm doing TA on where to put my entry zones. My first entry did hit, I think, yesterday at 59,872. We'll go through that here in a second. And I'm all out of all swings. So I swing trade Bitcoin. I also stack Bitcoin as well for long-term trades. So I'm looking not only for long-term dollar cost averaging into trades here, but also for swing trades. And typically I swing trade anywhere from 17 to 40% on Bitcoin. So it all depends on kind of where I get my entries and what Bitcoin's doing at that time. The first thing is that you can get access to this chart, and here's why you would maybe want access to this chart is you'll see here I have a lot of things here. If I turn this on, for instance, I've gone through and I keep this updated as far as all the value channels that Bitcoin has. You'll see also there is anchor vWAPs. So I have, I have key dates. I have anchor vWAPs. You'll see here's a couple anchor vWAPs from the highs and the lows. So we'll go through all of that here. But if you want to actually copy this chart and have it for your own, I'll provide a link in the description where you can copy it. Now I'll remove all the custom indicators that are there for people that are alpha members with me. That way you'll just have access to just the value channels and whatever notes are on here. So let's jump right in. Like I said, this is what we're going to cover, and I will hide that for now, and I'll make sure that we stay on track with that. So the first thing is from a core level. Let me shut down the mid VCs. Actually, I'll keep those on. Won't need those. So the first thing of note is that the RDA, this is a free indicator that's available on TradingView. It's what we use for bias in the system that I trade, that I developed and trade. And so far the RDA is holding. That was my entry zone, we always plan for overshoots. So my entry was an overshoot of the actual RDA. And that's what that was my first entry. So far on the daily level, the RDA is holding. Let's look at the structure time frame as far as the 30-minute. Let's see what we can learn from what's happening with price action right now. The first thing I would note, and let me turn on a few indicators here so that we can get some higher time frame, and we'll turn on the day. So the first thing of note is on the 30-minute time frame, structure time frame that I like to call it. We are at the mid control for today. If it gets above the mid control, our next target will be the upper control and then obviously the high. We are below the momentum indicators on the daily time frame. And like I said before, the actual momentum or the bias, the RDA is holding. So as far as the entry that I'm in right now, I feel okay about it. As long as the RDA holds, one of the things I'll be looking for, and we're going to primarily talk about pullbacks here, but I'm going to look and do the inverse and say, okay, well, let's go to the 4-hour time frame and let's look and see what would make me potentially add to my entry here, as far as maybe that was an RDA check and the market's going to continue and go up and at least hit this weekly second extension up here. We'll talk about that here in a second. So the first thing is on the structure time frame, we have the mix 200 right here, right around 66, what is that, 293? 292 right here. So the way I read this right now is that if we get back into this value channel here, then I would potentially look at adding to my longs, meaning that I would go long on Bitcoin as far as, okay, the RDA held, and this goes back to the daily time frame. This is the first test in a while. The first test is always the best. So far, the RDA has held. So as long, the one thing that I would really watch on this is we are momentum short now on the daily time frame. So what's key to watch is this zone right here on the upside and this zone right here, which is our momentum indicators. Now, The other thing that would be a good play if you were looking to go long is obviously the weekly open is a target. So we have the weekly open right here. Here's the weekly open right at 65,734. So that's pretty close. That's within a couple of ATRs here of this actual of what we see here on Bitcoin on the 30-minute time frame. So that might happen maybe by the end of the day, or we might have a follow-through candle for the next day that will at least test the weekly open. So holding above the weekly open and continuing up and taking out the momentum indicators, that would be key. So for me, I'm watching, are these zones? What happens in these reaction zones? So on the upside, those are the reaction zones that I'm watching for. If I was trading futures in Bitcoin, I would maybe be shorting in those areas. It all depends on what happens on a lower time frame, like the 15 and 5-minute time frame. But at this point, it does look like the 30-minute is recapturing the mix 200. It is recapturing the mid control for the day. So it does look like potentially the weekly open is a good target. So let's move on and let's dive a little bit deeper. The next thing we're going to cover is let's go to the anchored vWAPs and let's see what we can learn from there. So the other thing I want to mention here, and let me turn off these rectangles because they're just making noise here. I will put those in a folder and rename them. But the first thing to note as we look at value channels, let's do value channel analysis next here. So this value channel that we're currently trading within on Bitcoin was developed fully on the 4-day time frame starting on the 14th of March. And the bottom was created on the 29th of February. So it's been a value channel that we've been watching. Of course, we have the midpoint here. That'd be another key level that I'd watch for. If we get a close above that and it retests down, especially the weekly open, this is something I would consider going long on. And it should be obvious. What are our key levels to the upside? The key level to the upside, the number one key level on whether or not it's going to actually hit this weekly second extension here to the upside is real simple. It's right here. Using our favorite time frame, this is, I would say, we're going to name this 4-day immediate key level. So whether or not the market goes up and takes out this second, or tags this second extension high on the week, and what that is, that's a projection of the RDA extreme bands. If we go to the weekly time frame here, and you look and say, okay, the weekly time frame, where is the highest point that the extreme band has pointed towards? When a market is making new time highs, using the extreme bands of the RDA is a good target zone for telling you where the market might go. And you'll see here, this is the high right here. So that's what this is. This is the weekly time frame, second extension high print. So it printed up here. That's the high. This would be my immediate overextension target if it closes above the 4-day immediate key level. That's what I'd be targeting. So let's move on and let's cover the anchored vWAPs. We're going to go back to the daily time frame. And one of the things I'll mention is that I go quick here. I have a lot of videos, not necessarily on this platform, but in other platforms that cover the trade system and what I trade. I trade a reaction prediction system, momentum. It's a momentum trading system. I use it in all markets, all time frames. So let's look at the anchored vWAPs and let's see if we can get any information from that. Now, what an anchored vWAP is it's using basically on this chart, and once again, this is a chart you can get. We've identified the key highs and the key lows, and the lows are green, the highs are red. And let me turn off the mid VCs so we'll turn off the current VC so that we can really see this. And we'll turn off the foundation indicator so you can really see what we're looking at here. So these lines here are the anchored vWAPs. Now, first thing to note is the most recent significant low. This is right matching with the RDA, and it's matching with where price has stalled. So one of the things that I would look at with anchored vWAPs, because this red is from this high, is that we've got a zone here, and it's a fight between the lower zone and the higher zone. I would expect a strong reaction if price gets above here. So far, the first reaction or the first test of the most recent significant low has held up. So that's good if you're going long here. But what you have to concern yourself with as far as maybe taking profits or a reaction zone is this area right here, which is, this is the anchored vWAP from the significant high. So what I like to do is I like to start kind of drawing on the chart and basically just putting notes. That way I know where things are. So here, I'm going to put a time here, and we're going to put a vWAP high, just so we know that that level's there. And let's see if we need to do the low. Let's see if we can just keep the... See, I don't like to keep all these on just because, once again, it busies up the chart. Now, one thing to note is all of the vWAPs that go back are all the way down to 36,000. So if we do have a massive sell-off, let's say we do have a massive sell-off, I would highly expect that this zone here, as it got into this zone, would find massive buy support. That's what I would expect. So if that were to come to fruition, I would expect that we would see buyers step into the market. That's a pretty big sell-off. I don't expect it to get there, so I don't think that these are relevant. I don't think they'll play into the TA because we do have this major inflection zone down here. All right. The next thing we'll look at is we'll look at RSI signals. And let's do this first on the weekly time frame. Let's turn off our anchored vWAP. Now, the RSI signal that we use in our system is a custom RSI indicator called the RSI. And we look for patterns like this, a triangle pattern. See these triangles here? We have a green, red, green. Well, that green basically means go in that direction. We have a red, green, red. It means go in this direction. You'll see where we have that. So where we at in the cycle of the RSIs as far as the weekly time frame is we have a green candle here. And what we'd like to see if the actual long side would hold up, meaning that we would like to see a green candle print either on this candle or the following candle for the upside to be in play. If not, where we're at right now is that the triangle is basically red, green, red. And as long as that stays and we don't get a counter signal, we're looking to the downside for where potentially we should be buying. And that's what we're going to focus on now. So let's focus on, let's say that the market loses the RDA, loses our Bitcoin loses the daily RDA. Let me turn that indicator back on, our foundation indicator. Foundation indicator is all the indicators we use in our rec stock system. So we have the RDA here. The Mix 200 is down here at 48,000. When's the last time that the Mix 200 was tested? It was tested in October 23. So that could be something of note. It could be a target area. I'll say one thing that does align with that makes me think that I should start thinking in that direction and get prepared for that, is this inflection area here. This is a little bit longer of an inflection area and a value channel zone. So let's turn that on. Let's turn on this mid VCs. So this value channel zone is more of an inflection area. And the way I define inflection area, the way that we use them in our system, is inflection areas are quick areas of price action that are very clear where the price goes. It's usually an impulse, a little bit of a stall, causes an inflection area, then it impulses up. What's most important is the midpoint of this inflection area, right around 51,000, which is right around the 50K mark. The other thing that it aligns with here, I think this is another key indicator here. Let me see. See this little yellow line? That's the 4-day RDA. If we go to the 4-day time frame, you'll see that the RDA is right here. And I share this all the time. If you want to be a crypto trading god, trade the 4-day time frame. It is the single best time frame to trade. I don't think I've done a video here on TradingView. I should do a video on it, because it is the golden time frame for trading crypto. All right, that's the 4-day RDA. It aligns with an inflection area. So for me, I'll be up front. I'm really not looking to do any more entries as far as predictive reaction zone entries until this hits right around 51,000. If that doesn't happen, then obviously the long side played out. But I'm sitting on my hands until the 4-day RDA is in play. Now, obviously, if it ranges around here, if it ranges in this zone, so for instance, if it ranges in this zone here for a while, for let's say 2 or 3 weeks, what's going to happen to the RDA? Well, the RDA is going to start coming up. And 54,000 aligns with the weekly slow momentum. So this W here, that's the slow momentum on the weekly time frame. The weekly RDA is at 48,000. So the way I read this now, what I'm looking for right now as the chart sits, is I'm sitting on my hands until we get to this inflection zone, and I'll start my entries right around this midpoint of this value channel here, the 4-day RDA, and then I will scale in. One thing I will want to see beyond a doubt is there better be a buy support and quick reaction on this other value channel. That was a small value channel here, right around 47,000 or so. So right around 47,000. So my dollar cost averaging areas actually start from here and down to here is really what I'd be looking for. Starting here, dollar cost averaging all the way down. I should see if I can update this indicator to do something like that. It should be one of the things that I say often in my streams. If you don't catch I know TradingView turned off streams, but I still stream trading, is that it shouldn't be called trading. It should be called waiting. And I'm sure many people have said this, but a lot of times in trading, you're just sitting around and waiting for the key areas. And you're usually best off at waiting for the right zones to strike, especially in a system like what we trade, a predictive system where we predict the reaction areas ahead of time and we're trading these reaction areas. For instance, a good example, what do I mean by trading reaction areas? Well, the RDA, we always expect an overshoot. So when there's a key level like the weekly open or the RDA, we always expect an overshoot. And that means an overshoot in price, but you want to see the close at least close above it or immediately after close above it. So that's why I put my entry right around 59,874 or whatever it was, expecting an overshoot, expecting a first reaction. One of the things about reaction zones is the first reaction is always the best. So when it comes to reaction zones, the first reaction is always the best. And what that means is this is the first RDA reaction on the daily time frame since January, the 27th of January 24. And this is when I entered some of my swing trades. And we'll get to swing trades here in a second. This is where I entered my swing trades. And I exited some at this inflection zone, and then I exited some up here. We talked about this in my Discord channels and stuff like that. I need to start sharing more stuff on TradingView. I really do. Okay. You know, I'm used to doing streams, so I'm used to asking people if they have feedback or questions. So I got to get used to doing videos again. Let's talk about swing trading. Let's talk about where the opportunities exist for swing trading right now as the market sits. And I won't include the short side, but in all reality, the short side really is, well, I will. Let's just cover this first since we're up here. The mixed 200 is the first zone right here, right around 66 is the first short trade that makes the most sense. And then this weekly open zone right in this zone, that's 69. So 60. So if I'd be looking to short Bitcoin, I'd be looking in these zones. And I think I already outlined this before, didn't I? I think I did. I did outline our zones before. Yep, I did. So those are our zones. And I'll put those in an actual info box where you can actually, this is in the object tree. So it's underneath the data window. So if you go here and you go to the data window on the sidebar and then the object tree, you'll see all these object trees. And there's more than that. What I also have in here is I have significant time frames. So January is a significant month. If you see here, when I turn on January, it will highlight on the chart kind of the January pivots. And these are vertical lines. If we turn on September, then why are they not turning on? March. They should be turning on. March. I don't know why they're not showing. There should be vertical lines on the chart. It's really weird. Maybe it's something to do with the recording. When you get this, you should be able to turn vertical lines on, and that will turn vertical lines on for key pivot points around months. So I apologize that didn't show up. Don't know why that didn't show up. It's kind of weird. All right, let's turn these off and let's talk about long entries for swing trades. And when I look at long entries for swing trades, what I'm typically trading off of is I'm trading off of the 4-hour time frame as my market structure time frame. And then I'm dropping to the 30 and 15 minute for entries. So if we look at that, the first zone of long entries really is you have this inflection zone. I'd expect a reaction here, right in this zone here. That aligns with the daily open as well. The next zone obviously is this value channel here. That's really the first zone of what I would do as a potential upside swing trade. Right around between 56,000 and 57,000. That would be my zone for a swing trade. I'd expect an overshoot, and I'd look to, is this a long position? I'd look to enter, in here. I'd have tight stop losses, obviously dropping down to the 30-minute time frame, and then I'd target the upside indicators. By then, the chart is in a momentum and bias short environment. And what that means is that price is below the 4-hour RDA and below the momentum indicators. So the chart would be short, and this would be a fade trade to the upside. I'd wait for the turnover on the 15-minute time frame for that to go long. And what I mean by that is on the 15-minute time frame, here's an example of this. Let me zoom in. Using our momentum and bias indicators, right here is where the 15-minute time frame went long, and that's where I'd enter. I'd enter in this zone here with the 4-hour being my control. And then as long as the key levels held, I'd continue to enter until a 4 hour. So let's say that I took this trade. Let's say that I took this trade as a swing trade. And let's say that I entered here in this range here. I want tight stops. So I'd have a tight stop, because you can always start over. On the 4 hour time frame, where would be my target? My target on this trade on the 4 hour time frame would have been, well, target 1 is right there. The RDA is target 2. So target 1's right here. It already hit target 1. I like to trade in thirds, meaning that I would take 1/3 off, I'd take another third off, and then I would trail the rest of the remaining position. Now I'd also make a judgment call here. The RDA is so close to this level here, which is the weekly open. That's really only 1.65% away. So what I might do is I might put in trailing stops for my remaining 2/3 of position and try to trail it up to the weekly open. The key is I take profits along the way. I like to trade in thirds. The first profit would have already been taken because this is the fast or slow momentum indicator. The second profit is the RDA, and the third profit would be trailing. So that's how I would trade. That's how I swing trade Bitcoin. Real simple. Predictive reaction zones. If I was futures trading, I'd be looking to short right in this zone, like once again. Let me make sure we've covered everything. Reversion to the RDA magnet, bias, momentum. Yep, key levels. We've covered all that. One of the other things that we have in here that's on this chart that you might find interesting is if we go to the daily time frame, I consistently update and keep organized the key levels. I can't pause this video. I wish I could pause it so I could. Sorry, just a little bit behind. Here we go, key levels. So you'll see that opened up a lot of things. If I turn it off and turn it on, these are key levels that the market is still using and that I find important. So you should be able to, from time to time, go to the link that's in the description and see the updated chart that I've shared and kept updated. These are the key levels. So you'll see here, one of the things that aligns with the RDA is that this was the mid-inflection area from March 2024. We have what's on the downside that's interesting is that we have the most recent pivot high from March 2022. This is aligning, this green line is aligning with the MIX 200. Now, one of the things about the MIX 200 is that it's green right now. Now, see how it turns from red right here to green? Well, when it's red, that sometimes signifies that it's a weak move, and you should expect at least immediate pullbacks, weakness in the upside until it turns green. And what that really means is that the EMA is below the MA because this is a MIX 200, meaning that it's the EMA, MA combined. When the EMA is above the MA, it's green. So far, this has not changed over on the daily. So we're still seeing strength as far as the MIX 200. That can change in a day or two, though. The volatility that I'm seeing here is relatively, I would say not weak. What's the word I'm looking for? Well, let's just go back to the all-time high sell-off, and let's look at the difference there. So the difference there is, look at what happened on the last all-time sell-off. If a double top, overshoot of a double top, and then when momentum was lost right here, it never got recaptured. It was tested, and then we have an actually intention of an overshoot of the RDA, meaning that we have one close below, and then what really gave it away is this big close below here. I know it recovered, but it came back to the momentum indicators here, and it sold off. And it sold off from there, and it stayed momentum and bias short for quite a while. There is some changeover state here, but notice also the mix 200 turned red here as well, and that didn't change. It kept up. Look here, it was in a changeover state, it changed over again, and it continued to use the RDA and our momentum indicators to sell off, to sell off, to sell off. What I really want to highlight here is the volatility, or the actual ATR movements of these candles are a little bit larger and not as organized, in air quotes, as the price action that we're seeing right now. What I mean by that is there are some larger alpha candles here, but they're immediately answered. There is no large red candle, although you could look at this run here and say that that is significant. It did tap the RDA, but there is no large alpha red candle that is not answered. So I'd be looking, one thing I'll be looking for as far as a downside and whether or not we're going to hit this inflection area is this pattern right here. Look, we trade patterns. I mean, what is a trade system? All a trade system is a series of indicators, rules, and guidelines so that you can unlock the most powerful logic system that's ever been developed, logic machine, the human mind. And the only way that you do that is by using highly effective indicators and rules and that keep your psychology and your mindset in check so that you can identify patterns and you can trade those patterns with conviction. So a good example of this is the pattern I'd be looking for. This pattern right here. When it loses the RDA and it shows intention, well, I'll tell you how you trade this. It's real simple. If you see this unfold, you create a value channel from, you could use this where it lost it here, and okay, why is it not drawing? Create a value channel from here to the low. And of course you're reading momentum and bias. So as long as it stays, you know, your entries are on the momentum checks and the bias checks. But one of the things that's key here when you're looking at this is you create an immediate value channel and you trade the value channel. It doesn't get any more difficult than that. Look, here's the high of the value channel with excess. It lost a key level, 75%, and then it lost a key level, which is the midpoint. Once it did that, I'm trading it with conviction. I'm predicting a break. We've already got intention, so you know where you're wrong. You know basically if the RDA holds or this key level holds at the bottom of the value channel, you're wrong as far as the sell-off. So that, let's say that you can't short the market. Let's say that you don't short the market and you can only go long. Well, what does that mean? Well, when you see this pattern in the future that might roll out here, you're sitting on your hands until the next inflection area, until the market shows you that it's changing over from bias and momentum short to bias and momentum long. And how long did that take from the time that it officially really lost it? Well, if we go here, the last time, and this is something I personally don't think it's going to take this long, but it could. The last time was from here, this is approximate, to here, which is 441 days or so, a little bit longer than that, sorry. 465 days. The last time that we lost the RDA, it came down, found a bottom, and then went momentum and bias long and went and took out an all-time high. So let's say that the same pattern or a similar pattern were to roll out. What are we looking at? Damn, there's a lot of things on this chart. Let's do half of that. Let's do 200 days. Let's do 220 days. Let's say it loses it here. Let's go to 220 days. And let's say this inflection zone down here that we were talking about, that is, well, there's our first inflection zone, sorry. Our first inflection zone, which let's say that hits, and let's say that's 220 days or so, puts us right around December 24th, December 2024. So the end of this year. Let's say that inflection zone really isn't where it wants to bottom, and it wants to bottom from the high of the previous value channel that we talked about previously. Well, that would be a additional negative 24% and 220 days. Now, Bitcoin regularly does this. 35% pullback is, well, we'll just go back to the previous one just so that I do think something has changed a little bit in the market. So for me, I'm not expecting a 60% pullback, but I'm open to it. Once again, I trade charts. I don't trade, my imagination. If we see what this pullback is, that's 66%. If we see what this pullback is, that is 76%. So, wait, 66, 76, it seemed like. Let's do the same thing. Let's say we have the same thing. 76%, just to be open to it. Puts us way down here. Wait, that's not accurate. No, that is accurate. Puts us down to 19,000. From when it breached, when it created a new all-time high, right around 67,000, to here was a 76% pullback. If it follows the same model, it could do that. I am of the opinion that this cycle is a little bit different. So I would be open to maybe a 50% pullback to the 4-day mix 200 or the weekly mix 200. I'm really watching this inflection zone right here. If it beats this inflection zone. So this value channel here, right around 42,000. So that's a 40% pullback. So, one of the things is with this TA, hopefully I never know where TA is going to take me. That's the point of doing TA, is that I don't have any preconceived notions. I trade just charts. System I trade and I teach is just charts. We don't trade. I don't trade any fundamentals, any news, even in stocks. I trade Forex. I don't trade it. I don't trade around known news. So when the Fed is making an announcement, of course, I wait for the reaction. I trade the reaction, but I don't follow any news. I don't follow any crypto news, really. I really don't know. Other than the ETF announcements of Bitcoin, I do follow it enough to kind of understand, because crypto did used to be a passion of mine. But right now, I'm trading like I trade anything else. I trade charts. So I have to be open to this at least 40% move. That's one of the things I have to be open to. So what that means is that I have to plan to dollar cost average here and dollar cost average here. That's what I have to plan for. Once again, what is my thesis? My thesis is Bitcoin at some point in time in the future is going to get above 100K. I have a paper that I've done on that. I have stuff that I've done on other things where but that's my personal, it's either going to go to zero or above 100K is the way I look at it. At this point, all the Bitcoin that I have is basically, I mean, my dollar cost average is probably well below 11,000. As I will be adding here, this is what I've been waiting for, this signal to the upside, and this overshoot for me to actually significantly add on pullbacks. So I didn't really see this ahead of time, but these are the zones that I have to consider dollar cost averaging in. Of course, starting here. I need to move this up a little bit. Right there, starting here, and then starting here. And then, of course, here's the thing, and I'll end with this. If the daily time frame recaptures bias and momentum and recaptures this level, I might have to do quote-unquote the breakout trade. Most of my trades are predictive, but if I see that, if it does close above here, I will be looking to buy pullbacks to the momentum indicators if the switchover happens. And hey, if that happens, I'll do an update. Because right now, I've outlined what I need to wait for. It's the upside move and the downside moves. Hopefully this was clear. I know I went through maybe high-level stuff or things that... If you have any questions, leave a comment below. I'll explain it in detail or do a follow-up video. My intention is to share with you my thinking, how I really see Bitcoin, where I see the next moves, where I'm looking to enter. And it's a simple philosophy the way I trade. This system, especially with Bitcoin and crypto. I am looking at some alts, so maybe I'll do a video on some alts as well. But it really is a simple system of momentum and reaction zones. So we'll see. Leave a comment down below if you have any questions. And I am active, so I will respond and answer any questions you may have. Thanks for watching the video.